Welcome guys to Forex Success. Okay, I want to show you this strategy guys for step index. So firstly, I will just clear my chart. It's a very simple strategy. Clear out the indicators. You can see I'm on nice profit trading synthetic indices with this strategy. Look at my profit. So this is a small account I funded. You can see it's on profit of $70. I've been using it on step index. You can see it has always been profiting on step index. Yeah, it's a step index strategy and it has always been profiting on step index. You can see I had some losses on volatility 25 index. So, but on step index, it's really doing well. So, guys, I'll show you this strategy because I really want you guys to also make money with it. So, right here, you can see my take profit level right there. So, I'll just simply patiently wait. Though I got into the trade too late. I got into the trade late, but I'm still holding, just targeting about 15 to 20 pips on this trade. So guys, firstly, I just want to explain this to you. Watch this, guys. If you look at this chart clearly from the 1 hour time frame, you'll be able to understand that there is an up, down, up, down, up, down moves in this market. Let me get the drawing tool to make this easier. Do I have drawing tool in this one? Oh no. So the drawing tool is not on this phone. It's on my other phone. Okay, guys, just watch this. If you notice, these are things you need to observe before you take a trade. Observe the price structure, then use the strategy that you're using, the indicator strategy. Don't depend only on your indicators. That's what you guys need to understand. Look at the chart pattern. Look at this pattern right here. You can see the up, down, up, down, up, down. I've been catching this. If you watch, look at the trade. Look at this. You can see one on step index which is buy, one on step index which is sell. It's on this up and down moves. I think I caught this one to the down, then caught this other one to the up. So you can just simply understand, like common sense can explain this to you guys, that once this up and down is once you're getting this up and down move on an index, you get that, guys, on an index. So it's actually also very much possible for it to happen again. Like, take for instance, I lost some money right here because I was expecting a down at this level after seeing this bearish candle. You can see this candle that indicated reversal. I was expecting, and the stop loss was right here. So, but then it hits my stop loss. You get that, because the trade moved higher than expected. But guys, this is this is the point I'm trying to drop. When you see this up and down move, let's say you come into the market at this point, it is likely that this price is gonna this up and down is gonna occur again. That is for you to be looking for placing a buy at the bottom side. You can see we can get a trend line right here. It is likely advisable for you to be looking for a buy at this point and also looking for a buy at this point. So right now, with our strategy, guys, that I'm gonna introduce to this chart right now, so that you see how it also works. So when you just come here with the right knowledge of this market, even with that indicator, you should know that this price is expected to go to the upside again, similar like this and this. So there are some cases where it won't reach the top point, that's the highest level. That's why you just set your take profit around any point that you know the market is going to face some challenge. Those are previous levels that price actually reacted to, like this point and also this point. So that's just basically how you do it. So the indicator you just need is a moving average. A moving average 40 EMA, that's the 40 exponential moving average applied to close style 3 pixel. The color red, this can just help you understand what you need to do. So when you get this stuff, that's the up and down move on a 1 hour time frame, or on a higher time frame like the 4 hour time frame as well, you can see it's giving us the same thing. So when you get something like this, you just go down to 15 minutes and look for an entry, or you go down to 5 minutes and look for an entry. You see these guys. So with this 40 moving average, it's gonna tell you when the price is actually trying to go up or trying to come down. You can see I have a stop loss right here for this trade that is below this previous lower low, lower high. You can see that. So this moving average crossing below the chart indicates that this market wanna go to the upside, and you seeing this from the 1 hour time frame. What shit? Okay, guys, so and you seen this from the 1 hour time frame, just like this, the up and down. Your own prediction based on price actions shows that this market is going to the upside. So then you come to the 5 minute time frame. You come to the 5 minute time frame and it's still giving you a buy signal. It's good for you to place a buy with this. So that's what I mean by don't rely only on indicators. For real, you don't need to rely only on indicator. So getting that confirmation from the 1 hour time frame, and then getting also this from the 5 minute time frame, the 15 minute time frame, you are likely to get a buy. Exactly. So this market is actually giving me a retracement due to this level, but I know it's gonna break through it, go to the upside. Exactly. So if I like, I can even add a buy right here, but that would be like maybe probably risking more than I was expected to. So like this trade I'm holding right now, look at it. It's the trade was taken at the level of 8513 and the stop loss was placed at the level of 8508. So which means I'm risking $5 with a 0.1 lot size for this trade. Risking $5 for this trade to gain, how much is it, from 8513 to 8525? That is gaining $12, risking $5. So that's just basically how you trade. If you're using a one lot size or higher, you'll be gaining more, like risking $50 to gain $150. And most time when you know the analysis, or when you know your prediction, your signal is correct, you are mostly likely to win the almost every time. So that's just how this thing is. You can trade, make sure you use proper risk management so that you will end up blowing your account. Because when your account is blown, that means you've been defeated. But when you still have funds in your account, then that definitely means that, yeah, you are still on the run. You're just only having some limitations. So that's just how it is, guys. That's just basically how this thing goes. So for right now, I'm gonna place one more buy. That is, I'm adding extra risk to what I actually was risking before. You can, like I said before, I was risking $5. So right now, I'm risking more, since it's definitely mean I'm risking extra $5 plus this, the difference between here, which means I'm risking $8 right now for this trade. So that's just it. So this new position I entered is actually supposed to have a different stop loss level, though it depends. You can decide to just maintain the same stop loss level, or you can decide to put a stop loss level just below around this level. So that's just basically how you trade conservatively, guys, and make profit consistently. So like I said, this is Deriv, and the link to create an account is at the description below. So click on the link to create an account so you can start trading, and make sure you subscribe to this channel, turn on the notification bell so you'll be notified when we drop a new video. We'll have a Telegram group, which the link is at the description below. Click on it to join our Telegram group, because you can get signals when we drop signals for you guys. So most times when traders face something like this, whereby the trade is actually returning, they get scared and want to close the position just like that. So yeah, sometimes you might be right, and sometimes you might regret closing the trade. Exactly. Sometimes you might regret closing the trade at that point, but sometimes you might be lucky closing it, yeah, because it might definitely reverse, or it might continue moving on that direction. So whichever way it goes, you just know already you took a trade, you have a risk, so why not just face the risk? You don't need to like quit on the way. You just need to face the risk and do it, because it might go your way even after or before getting close to your stop loss level. So that's just it. So I'll just simply wait and let what will happen to this trade to happen. Already my prediction and signals are correct. I'm only following the prediction and the signal, so having a stop loss right here, this might just be a retracement that might not get you to stop loss, and then it continue moving to the upside. So these are just things we just have to face on this Deriv trading synthetic indices. Though if you watch the previous video, you know I gave an analysis, that is the weekly analysis on step index, that step index is going to sell, that is on a very long term frame, having a very long move to the downside. If you watch the video, you see that step index to sell to the downside. Yeah, but that doesn't mean you can just catch some few pips that is scalping within this period. So we can have a bullish move at the end of this daily time frame. You can see we're just only following the previous structures of the market, which are the up and down moves. So I'm seeing this market is gonna hit the take profit for both of them, so I'll just wait for it. So thank you guys for watching, and just trade carefully and manage risk. That's the major thing.